Good evening. This is Ken at Tortoise Capital. This is Coffee Talk, some charts and discussions Bob and I share on the weekends as we sniff around the area of interest. Here's why the longer term view might be of interest to you. We're taking a look at General Electric on monthly charts using our standard framing. And Bob uses a bit of a modification on the MACD. He uses a 430, I use a 1030, but you get the same kinds of insights. I find the additional layers of Bollinger Bands that he's put on here helpful as well. So attractive charts. So let's see what we can see looking back over the last 20 years and long-term PSAR flips. This is what you would think of as the nearest neighbor approach, that when you're looking at taking a sample of historical case studies, you look back to try to find examples where the conditions are similar, and you just take that subset of possible samples. So it's kind of a structured design sample rather than a pure random sample of all possibles. So what Bob's highlighted for us here are some extreme moves into the winter, and you can see obviously the kinds of moves that happened. This was 60 to 12, or maybe 60 to 20. This was something like 20 to 40, 40 to 12, or actually down even to 10, 40 to 10, 10 to 35, 35 to 10, 10 to about 12 right now. Notice the endurance of the PSAR flips when those seasons, those directions change, and notice the duration of these PSAR flips. So we've gone from roughly 10 to 12, but have had 8 months of failure to fail further. It's come back to the VWAP and the RL270. Got some safety built in, and we're well into the spring. It had a chance to fail here. It didn't. That was this. It held and resumed. And so the moves from this point are reminiscent of moves in those conditions. So why you might be interested in the monthly framing and the use of the MACD histogram to identify extreme conditions, and the use of the PSAR to help signal directional biases that reinforces the MACD. West Fraser Timber Company Ltd. monthlies. You know how important I think the lower lows are as a way to estimate the real progress of civilization over time. Yeah, you get periods of optimism and joy, but at what point does the failure end and the springtime buyers come back in? When do they fail to fail further? And if you think of that as something like the underlying rock steady baseline true value of people who know the business, and you see these kinds of rising lows over the last 10 years, then you realize these are something like the extremes of optimism on the upside. And notice again the PSAR flips. PSAR flip, $10 built in a really nice month, and it went from winter, spring, summer, fall, winter, spring, and here we are getting ready to cross that Red River. Getting ready to cross that Red River. It went from 45 to 100. Now it's basing at 50 and still at 61, so you still got $40 of upside. Timber. Got to have wood. S&P small cap 600 pure growth. So the small caps have been getting slaughtered on a capitalization filter basis compared to mid caps and large caps over the last 5 or 10 years. And so the large caps, especially those large cap techs, have just had some extraordinary valuations. You wonder how much is left. Is this starting to see some kind of rollover? So you have early in the PSAR flip in the spring, and into the summer, I would say. So we're looking at the RSI here. This dipped into the winter and now has resumed really summer. And that summer can last a long time. Rejection of winter and back into the summer, that can last a long time. Nothing wrong with that. And the PSAR flip, so we're early in the life cycle of RZG. Price channeling, rising higher highs, rising higher lows, clearly defined PSAR flips. Now we're looking at long-term treasury. The rejection of the fall back into the spring, or into the summer, excuse me. So that looks to me like, if you were concerned at all about chaos in the political system and the real potential of Bernie Sanders and the impact he might have on the economy, he doesn't even have to pass any legislation, and the tide of the economy will roll out. And that's regardless of what you believe about the moral issues associated with his economics. The pragmatists who run money, looking at it on a risk-managed basis, that's an extraordinary shift in policy orientation. And if you listened to his victory speech in Texas after crushing it in Nevada, it is game on. That is a powerful message that he delivers fearlessly, that resonates with young people, and the 99% who did not benefit from the great bull runs of the last decade. And I don't argue with their morals. I'm just looking at this as a asset allocator, risk manager. So this posture here for an insurance policy with a nice PSAR flip, I don't know. If that looks like it's failing, though, then don't treasuries come back here? So this has a nice, I'd make that a monthly trade frame. I'm ready to buy the breakout, but I'm also ready to play the breakdown back to that fair value here. So that's what Bob's looking at here in this yellow circle, is that would be his indicator that if this move were to fail and reject that double top, then the next projected move would be something like back here at 35 by the end of the year. That would be, this is how the political trade-off between Bernie and Trump might unfold. And that would be his trigger to play the other way. So it has some anticipatory value for us there. CMEX, basic materials, early in the PSAR flip. Here's one where it looked like, a low, a higher low, a third higher low, and getting ready to go, and it rejected at the PSAR. So this venture, you stop and get short here, is what we're showing. And then you avoid all that, because its failure to follow through is information. But when it does follow through and crosses that dragon, then you get some nice moves. That doubled from here to there. That's a 100% gain. So this cement, building materials, globals, nothing wrong with that. And then you have a nice stop and reverse at about 3.5. So 25-cent risk. What's wrong with that? Nothing. Yep, same chart. Opened it twice. Just for the heck of it, I'm going to be studying 3D printing as a sector, I'm doing a collaboration for research with University of Kansas MBA program grad students focusing on the area of 3D printing and some of the military applications. So we have a partnership between the two colleges. So I'll be looking at this one really just as a way, since I'm looking at the sector anyway and I'm interested, I'll be looking at this as a way to start playing that sector and digging deep into the ARC. And my programming partner Danny, who put together that most outstanding TC2000 bundle, still on sale, contact me for a coupon for $1,000 off. Since he's based out of Israel and is working some hedge fund analysis over there, we're starting to take a look at this one too. IRZL, also under the ARC, IZRL, I should say. This makes it interesting. I have a couple guys doing their masters on autonomous technology and robotics, so I'm looking at this one, ARC-Q. And ARC-K has a big position in Tesla, so that's always on my radar as well. All right, so now we'll take a quick look at the Wiz portfolio. Sold off sharply down to the PSAR support. 10 is rolled over, Dragon's rolled over, the 30 is rolled over. You could actually think of this, a break here, as the OWL entry. As soon as we get that RLXD, you could play that short. That's how much that sold off. High yield bonds holding stable. IJK, the mid-cap growth, held up better than the large caps. In other words, it didn't penetrate the Dragon yet, and it just started to roll over. The Dragon and the 30 haven't yet, so mid-caps stronger than Wiz itself. The large cap growth did penetrate. The 10 is rolled over, but not the 30 and the Dragon yet. Q-Tech did get smashed. That's the NAS 100 Tech Index, already broke the PSAR. That's going to fail back down to here, it looks like. And this rolled over. High yield held up well. Semis crushed. Growth at a reasonable price. Not as, it didn't sell off as much in the last couple days as tech did, but it peaked earlier and started. That was money coming out of the other large cap non-tech growth areas. So that actually does not bode well. And then the mid-cap momentum. So to me, Wiz is really postured to get hurt here. So I'm not optimistic on that. So that's a quick look from Coffee Talk this weekend. See you in the chat room.